On today's hot sheet, I'm discussing Redfin's 2024 housing market predictions. Of course, they want to throw their hat in the ring. Home buyer affordability and job openings. Today is Wednesday, December 6, 2023. I'm Byron Lazine, and the hot sheet starts now. This wouldn't be the week of, month of, time of the year of without Redfin throwing their hat in the ring for 2024 predictions. It seems like every day there's a new report with projections and outlook from 2024. I've been the most critical of realtor.coms. Will I be that critical here today of Redfin's? Let's take a look. Redfin predicts that 2024 will be the year that home buyers catch a break with home prices falling and new listings rising. This is their personal headline, not my analysis. The report is published by Daryl Fairweather. If you go back on my Twitter X, you know I've definitely been critical of Miss Fairweather and her stance against real estate professionals. But I won't hold that against her here as I look at some of the predictions, because in fact, one of her projections for 2024 is maybe the best I've seen yet. Of all the projections, I think that there's one in particular that's going to make everybody here on the hot sheet smile. So hit a thumbs up for that. Make sure you're subscribed and hit the bell here on the hot sheet so you never miss an episode. And Phoebe, thank you for finally joining BAMX family. You can too, if you haven't done so yet. Use code HOT to get 10% off of BAMX. Starting on Monday, we're going to be releasing all of our show notes to BAMX members from this show each and every single day. The show notes are extensive. I'll give you a sneak peek at what those look like if you haven't seen them yet before we sign off on this show. Let's get to prediction number one, though, from Redfin. First prediction deals with pricing. First projection from Redfin is that home prices will fall 1% in 2024. So Redfin now joining the camp, and all of these charts that you have here, I'll make it easy on BAMX members. It'll be in the daily download. So you got one place where you can go and download all these if you want to use some of these. There's a few that I really like. One in particular, again, is the best I've seen yet. But Redfin now joining the camp of many that are adjusting their pricing projections for 24, not only to be flat, but to the downside, right? We've seen Zillow come off of just 2-3 months ago at 6.6+% appreciation down to a flat year. Redfin is in the camp of a negative home price appreciation, similar to realtor.com, right? Realtor.com was at negative 1.7%. Redfin here coming in at -1% for change in year-over-year median sale price of existing homes. Okay, going into projection number two. This is one that'll make you smile, but this isn't the one that I'm alluding to that I really love. This isn't the one that I've said it's the best I've seen yet, but it is a good one. Prediction number two, new listings will tick up. Home prices will fall because supply will rise more than demand. Okay, so what I had a real hard time with in a previous hot sheet earlier in the week on realtor.com was that they said inventory would fall 14%, but that home prices would fall 1.7%. Yet right now, as rates are coming down, we're seeing in the last 3 weeks, demand is starting to tick up a bit. I think we can all agree in most of our communities, real estate agents and professionals across the country, that there's still a strong base of demand for those available. Yeah, obviously it's nothing like the COVID years, but there is demand there, and there's a lot of pent-up demand waiting for things to happen with rates. But Redfin is making the projection that they will see prices fall because demand won't be greater than the rise in supply. Interesting. Are they projecting a lot of supply? We're going to have to dig deeper here to take a look at that. But Redfin, they've seen double-digit annual increase in homeowners contacting them for selling their home, a double-digit increase in people thinking about selling alongside a small drop in requests from prospective buyers. So Redfin tracking their traffic is seeing a drop in requests from prospective buyers. That could also mean a couple other dynamics. There's a portal war happening. Homes.com continues to take space. Are they taking it from you, Redfin? I don't necessarily want to put my eggs in the basket of what Redfin is seeing from buyers and sellers on their website, because I know that Homes.com every single month seemingly takes more market share from the Zillow, Redfins, and certainly from, as we've seen, Realtor.com fall back in that race. Prediction number 3, home sales will increase and end the year up 5%. Home sales will increase. This is the one that has me smiling. If you're a real estate agent, it should have you smiling as well. Look at this chart. We know where we're at right now, 3.8 million on seasonally adjusted annual rate for home sales, for total transactions, for units, whatever word you like the best. That's where we're at. But they've got it up from here. And they don't only have it up from here, they have it up in the next 90 days. Q1, 2024, we're talking 4.1 million. That was more than Q3 of 2023. That's incredible news. We're about to have our best quarter in the last 9 months for seasonally adjusted total transactions, more opportunities, more abundance for real estate professionals who are putting in the time, energy, and effort. But it gets better. We go up the ladder in Q2 to 4.2 million seasonally adjusted. We go up the ladder in Q3 to 4.35. And Q4 looks at 4.5 million seasonally adjusted transactions. Q4 of this year at 3.85. We're talking about a difference of 650,000 units. You always multiply that by 2 because there's 2 sides to every single deal. No matter what Michael Ketchmark wants to do about it, there's 2 sides to every deal in 2024. This is an abundance of opportunity coming in 2024. The bottom of transactions is now, and every day as we move past the holidays. Not wishing the holidays away, but I am looking forward, and the future is bright for 24. Every day we get closer to 24, we move further away from the bottom of transactions. It's right now. It's here. It's December. It's up in January. We start to get into being able to increase those opportunities. We also continue to see agents drop off. The amount of agents dropping off this month might be the biggest yet. Okay. So, and I'll answer that. You can leave that comment up there. I'll take a look at that in a second, Bobby. We're seeing every month more and more agents get out. That COVID agent is rapidly disappearing. Okay. They're evaporating. When things were easy, you had those agents in here. They're not there. That's why there's going to be even more opportunity for agents. Heather says, am I sleeping? But didn't they say demand is projected down? Yeah, maybe I misspoke. Redfin is saying that they're projecting demand to be down. Oh, so now you're looking. I see where you're going with that. Heather's like, hey, Redfin just said in one of their first 2 projections that they're seeing demand down. Yet, now to be fair, here's what they said. All right. I see where you're going with that. You're like, wait, transactions are up, but demand is down. How does that work? Here is what they said. Home prices will fall because supply will rise more than demand rises. So, supply and demand. So this is leading me to believe that they're on the total opposite end of the spectrum as Realtor.com. Realtor.com says we're going to have 14% less inventory in 2024. To show that transactions go up, to your point, Heather, great spot on that. To show that transactions are going up in one projection, and that they're saying supply will rise more than demand, we got to believe that Redfin believes we're going to have a ton of supply. Jennifer, there's some great COVID agents. I'm sorry, I shouldn't categorize all COVID agents. I've got a couple COVID agents right here that are going to make $250,000. So there's no problem with the COVID agent. But I think we can all agree there's a large percentage of COVID agent haven't been through the down spell now, and you're seeing it in your market, I'm sure, Jennifer. Part-time people, not a full professional, who are now going and getting a full job and are seemingly, whether they're giving up the license or not, exiting out of the business. Topic for another day. But this would lead me to believe, to Heather's point, that Redfin is projecting a high number of inventory increase. Okay, that's just reading between the lines. That's got to be where what they're going with there. Again, this is one of my favorite charts I've seen for projections for 2024. Transactions being up, you times all these numbers by 2. Those are the opportunities for agents. And my point about the COVID agent is that we're going to see less agents. So the pool's not only getting bigger on transactions, the pool's getting bigger on the competition between or the opportunities between professionals. There's not a lack, there's not a shortage of opportunities for the professional agent. Moving to projection number 4. Before I do that, I'll take the quote here from or the comment from Devin and Dustin Fox, the Fox Homes team. I'm not understanding the logic that prices will go down. If rates also go down, how much so much pent up buyer demand, more sellers will hold on to their sub 3% mortgage than buyers sit on the fence. And that's kind of the point there, that I guess Realtor.com was trying to make with their 14% drop in inventory, is that there's going to just be, this continued lock-in, almost a rapid increase of the lock-in effect of the Cold War. Now, I believe there's pent-up buyer demand. It's hard to put a number on that. When we look at Mortgage Banker Association, it's certainly well off of, applications off of last year. It's ticked up the last 3-4 weeks. It's going to be dependent here, and this is where these projections can get a little wonky. It's going to continue to depend on how low can we go on the 30-year. We're getting good news on that. But that's going to be a huge dependent. So if rates go down, I can't see prices necessarily going down 1%. I'm going to, 1%, the people that are, 1.5%, that's really flat. There's going to be markets where it goes up. But yeah, I get the logic there for sure. Prediction number 4, mortgage rates will steadily decline. Okay. This is a big one, but they will remain above 6%. So mortgage rates gradually to decline in 24. They've got us at 7% even for the next 90 days, call it next 110 days as we move through December and throughout quarter 1. So they have us just flat where we are today. We haven't seen that. Okay, let me just take a quick look here, right? Let's take a quick look together rather. We haven't seen, let's just go, I'm on the 1 year on the 30-year fixed rate on Mortgage News Daily. We haven't seen a quarter where we just ride a line. Now, we've seen that historically where you have a flat, where you have a more flat. If I go, if I max this thing out, see here you have like back in, let's go 2004. If you go from January 2003, they were at 5.9. And you just kind of ride that out. See it not really changing much at all. You go all the way to January 2005. What are they at? 5.72. That's a 2-year run where it's just flat. It's just flat. Okay. We're not seeing that right now. We're not seeing a 90-day run where it's flat. It's very volatile. It's up and down, obviously, with the trend of being more up. We're on a down slope, and hopefully we can continue that momentum. But it's really hard to project that the 30-year fixed is going to be flat for 90 days. But that's what Redfin is projecting here. They're projecting that over the next, really 110 days, because we're already at 7% right now. It's where we ended the day yesterday, 7.08. That we're just going to stay flat right here where we are right now, 7% over the next 110 days. Okay. But that's their projection. 6.9% in 2024 quarter 2. So I don't know, maybe they've got some volatility in there, 7.5, maybe comes down to six. It'd have to come down to 6.5 to even out to seven at some point, the same amount of time that it sits at 7.5. But over now, the next 6 months, they have us really at where we're at right now, about 7%, before dropping in quarter three to 6.7 and then quarter four at 6.6. So not much volatility in the 30-year fixed, according to Redfin. Certainly a stabilization of what we would all agree is a higher for longer scenario. Anything up over the 6.5, we can start getting a five handle there and get closer to the 10-year average of 4%. Then we're really, looking at a market that opens up wide open. Okay. Let's go into prediction number 5 from Redfin. Change will come to the real estate industry. Wow. Redfin has been very vocal. Obviously, they left NAR publicly due to allegations on the issues that they have in-house, as well as the lawsuits. And here's their comment for their projection in 2024. An industry that is mostly impervious to change is now changing quickly. So Redfin can't help themselves, but to always take a shot. Okay, this is like a subtle shot. An industry that's been mostly impervious to change is now changing quickly, a trend that will accelerate in 2024. For the first time in Redfin's nearly 20-year history, our agents reported widespread discounting among our competitors in 2023. If not in the fee publicly offered to the buyer's agent, then in commission refunds or private listing agreements. In the first time in Redfin's near 20-year history, our agents, Redfin agents, reported widespread discounting. So Redfin agents data, I haven't seen an MLS where there's a Redfin agent ranking amongst the best of the best. That I might be wrong there. So they're taking their agents' data, feel for the market on an overwhelming discounting. We know that consumers overwhelmingly don't flock towards a discounting offering. It's available. Everything in this business is negotiable, but consumers overwhelmingly throughout history have not picked the discount. They continue to do that. I think, from what I see in most markets. But Redfin wants to make the case that that's accelerating. Of course, they believe in that, dollar item menu. Remember Wendy's used to have the like 8 or 9 things for $1. They had all kinds of wacky things on there: chili, salad, burgers. It didn't really make sense, but everything was $1. And if you were in high school, you go hit up the Wendy's and you can guess why that was so attractive to a high schooler. As newspapers and real estate portals publish more information about commissions, home buyers in 24 will become even more aware of how much an agent costs and less apologetic about negotiating commissions. And rather than hiring their own agent, many home buyers will work directly with the listing agent. This has long been common with the listing agent works for a builder, but with inventory low and competition among agents high, more resales are now being handled entirely by the listing agent. So, I wouldn't call these real projections here. This is more of Redfin, CEO saying, "What have my hopes and dreams been for 20 years?" And then slapping it into projection number 5. Just and this is Daryl Fairweather. So again, I'm going to applaud her where I think, some of these predictions are data driven. This one is prediction number 5 is more ego driven. She hates the real estate agent. You can go look her up on Twitter X. She's not a fan of real estate professionals at all. So prediction number 5 for me is her on her bias train there. Prediction number 6, renting will lose its stigma. So she's opposite ends of what Zillow says. Zillow says the starter home will be the single family rental. Demand for large rental apartments and houses will climb. Lose its stigma. Okay, so I'm sorry, I misquoted that one. So lose its stigma, meaning more people are going to embrace the renter lifestyle. Okay, so same page there. We're already seeing signs that young people are redefining the American dream. Nearly 1 in 5 millennials who responded to a 23 survey believe they'll never own a home. So she believes that we're going to have renting. I don't believe it's that the stigma is like, oh man, you know, uh, this is awesome. I'd love to be a renter for my entire life. I believe it's a decision that many are going to have to make due to affordability crisis and due to, Jerome Powell policy restrictive policies on homeowners, or future home buyers rather. Prediction number 7: Biden has a housing problem which could hurt his reelection bid. I've been critical of government on both sides of having a problem on creating supply. Okay, that's the biggest problem. Their inability to help developers and the top of the market that can move the most supply, their inability to help purchase supply as opposed to rental supply, has contributed to the housing problem. Biden probably has other issues on his hand that he's more focused on, I think, than that with a looming election. So we'll leave that at that. There's more in store for 2024. Writes Fairweather. Big price declines in coastal Florida. We're not seeing that yet. A wave of boomerang migration. Fairweather, for Florida agents here, she hates the agent. She also hates Florida overall. She's never really said bullish things about Florida, always rooting against it. So this is in line with her way of thinking. A wave of boomerang migration. Local governments enact policies to improve housing affordability. Prices will fall in some metro and rise in others. We expect prices to fall fairly significantly. I'd love for Fairweather. She's an economist. Put a number on it in coastal Florida, including Northport and Cape Coral. That's partly because prices there surged during the pandemic, leaving a lot of room to fall. I think prices are coming down. I own in Naples, Florida, for example, which is just south of Cape Coral. I do see inventory coming up, which is going to dampen those rapid increases on price. But she said prices will fall fairly significantly. Is that 5, 10, 15? Because you can kind of get confused. Put a number on it. You're an economist. People will decide where to live based on in-office policies, climate risk, and affordability concerns. There's a whole bunch of reports that debunk, this one that actually say the opposite, that nobody's making decisions based on climate risk. How about that report we covered earlier in the year? There's more people moving into these fire-prone areas in California, these coastal concerns in Florida than ever before. People are flocking towards the climate risk areas. I'm not saying that's good or bad, but people aren't all of a sudden this year going to make a decision based on climate and move out of that. That's just not happening. Now, they may make a decision on not being able to insure their home. It's the insurance that drives them out more than anything else. Local governments will focus on housing affordability. Yeah, they'll focus on it too. There's some great programs out there, but unfortunately they'll focus on it from first-time home buyer perspectives as opposed to supply. That's the trend that we've seen. More homeowners will use their home as an ATM, pulling out cash to cover credit card debt and home renovations. I agree on that one. I think, unfortunately, there's going to be people that got themselves into an overspending situation and are going to get stuck. And you'll see refis tick up, albeit from a 2023, real low. Speaking of mortgages, mortgage application payments increased 2% to $2,199 in October. Homebuyer affordability declined in October, with the national median payment applied for buy purchase applicants increasing to basically $2,200 from $2,155 in September, according to Mortgage Banker Association. Buyer affordability conditions declined in October, with the jump in mortgage rates during the month dissuading would-be buyers from entering the housing market. This is Mortgage Banker Association Vice President Edward Sealer. MBA expects affordability conditions to remain challenging, close out 23 before a slight improvement by early next year. So really high payment. And that is why I don't think the stigma of being a renter is any different than, for someone who wants to achieve, who wants to grow generational wealth. I don't think the stigma has worn off. I think the reality of, okay, what can I buy with a $2,200 mortgage payment in my market versus what can I rent and it's, you may have brand new amenities and, you know, 5-star like amenities on some of these multifamily projects that are being released into the market and in some areas of the country versus a home that needs to be on fixer upper 5 times over for a $2,200 mortgage payment. That's the reality that they're faced with, where it's like, I'm just gonna, get the most out of my money and or even save money right now because it is more affordable for some, and that's where some of those renters just are gonna have to um, obviously make that decision for themselves. Certainly, the ones uh, on a lower, uh, time frame of when they're going to be living in the house. All right, Department of Labor this morning had a release, and we look at this because it impacts the decisions that the FOMC, Jerome Powell, and the Fed committee are making. And the number of job openings today reported decreased to 8.7 million in the last business day of October, which is a decline of 617,000. You obviously would have some seasonal, I think, aspects to that, but you're also now well off of that 11 plus million job openings that we saw earlier in the year. So businesses are still investing 8.7 million job openings right now, but they might be investing smarter. They're not going as aggressive in the competition for labor, which is going to dampen any wage growth, which is good for the fight against inflation. The job opening rate decreased to 5.3%, down by zero point 0.3 percentage points over the month and 1.1 point over the year. Job openings decreased in healthcare, social assistance, finance and insurance, and real estate and rental and leasing. However, they increased in the information sector. I hope Jerome Powell saw that part. Rental and leasing job openings decreasing. It's also in line with what we've seen with rent prices. They're decreasing. We get CPI next week. Okay. And so hopefully that will start to really finally reflect that these rent prices have been decelerating all year. In fact, down to flat, or even some reports we've seen at negative 1% on rental prices. All right. CNBC on the private payroll report today. Private payrolls increased by 103,000 in November, which is below expectations, below the downwardly revised 103,000 in October and the 120,000 Dow Jones estimate. After leading job creation for most of the period since COVID hit in early 2020, leisure and hospitality recorded a loss of 7,000 jobs. I got to say, leisure, hospitality, travel, I'm seeing, we'll see what CPI says next week. I'm seeing airline prices come down. These are all signs that we're actually further along on the fight against inflation than Jerome Powell wants us to believe. When you pull that phony made up number of equivalent rent out of CPI, I mean, we're near the 2% target right now, which would make the case that the Fed should be cutting rates earlier than the projection of May. Right now, the market still has priced in that they will do nothing in December when they meet on the 14th and the 15th. Okay. Here's the trend on job openings, 3-month moving average. Ratio of job openings to unemployed workers also trending down there. And then we can take a look at hiring rates, workers who quit their jobs as a share of total employment, and then newly hired workers as a share of total employment, also trending to the downward direction. Okay. There's your update there on all things hot sheet. Starting on Monday, we're going to be releasing these show notes. If you're watching on YouTube, you see these show notes are extensive, broken out by each and every single segment. Every single day, we will upload these show notes into BAMX so that you can grab them for your local show. We do about 15 to 20 different segments on the hot sheet each and every single week, of course, because it is the only live housing show on the internet each and every single day. You can take the topics that make sense for you, add them to your local topics, and have your local hot sheet. These show notes can also be used in your social media posts, as well as your email and information releases to your database. If you want to get access to those show notes, make sure you're a BAMX member. Use code HOT to get 10% off of BAMX today. Speaking of today, let's take a look. Where are we at? This number continues to improve on the 10-year. We're at 4.145 here today. Yesterday, we did have a slight decline on the 30-year fixed. It was welcomed by all, I'm sure. A 7.08. It's the lowest reading we've had in quite some time. We'll look to hopefully continue the downward trend. We've been very stable here on the last 6 readings, bouncing between 7.08 and 7.13 since we had that nice drop from between the 28th and the 29th from 7.3 to 7.13. So continuing the downward pressure on the 30-year fixed. Hope you have a great day here on this Wednesday. I, of course, will see you back here tomorrow on the hot sheet, 9:30 on the east, 6:30 on the west. Until then, toodaloo.